Now, the market may be at all-time highs, but there are a handful of companies that were punished after Q1 results. And my next guest says it wasn't warranted in all cases. He's got 3 names with attractive entry points because of that, including Lowe's. That was our mystery chart at the top. For more, let's bring in David Katz. He's the CIO at Matrix Asset Advisors. David, it's great to have you here. And just before I dive into Lowe's, I don't know if you heard the tail end of that discussion. Most people now seem concerned the Fed will cut too late, i.e. the economy's slowing and they need to get ahead of that. Do you broadly share that concern or not?
Well, we're less concerned with the exact month that the Fed cuts and more focused on the fact that the next move is going to be a cut. So whether it's September or December, rates are going to be going lower. The economy is still doing pretty good and businesses are doing good. So we think that's a good environment for stocks. We also think it's a pretty good environment for bonds. We just wouldn't get obsessed on the exact month that they're going to be cutting.
Okay, so you're maybe a little bit more bullish in your outlook and kind of your analysis of the economy. Okay, so just that might underpin the discussion we're about to have. Talk to me about a couple of the stocks that got hurt in the first quarter, and you think undeservedly so.
So what happened in aggregate is if companies beat their expectations, the stocks could do okay. A few outliers where they did really well, stocks went up a lot, like a NVIDIA. But a number of companies like a Cisco, Lowe's, Tyson, and Zimmer all had pretty good quarters, but the market discounted the fact that they were doing well. They wanted more, and the stocks have gone down to really low valuations. A lot of the companies I just mentioned are selling below 15 times earnings, paying pretty good yields, and their outlook over the next 6 to 12 months are pretty good. So it's harder to predict the market's direction. We think it's much easier to buy a really good company at an attractive price. And if you do that, we think 6 to 12 months from now, those stocks are going to be a lot higher.
Okay, now, because you're so good at answering anything that I can ask you, what is going on with Apple today? This is extraordinary. I don't know if we can put up the chart. So they have their event yesterday, so much anticipation, perceived in the moment as kind of, I don't want to call it a dud, but it was, it wasn't one of these whiz-bang moments, really. And yet the stock today is making this huge one-day move, up 6% now as people are digesting everything that Apple has just debuted. It's at 205. It's one of the few things even working in this market. What would you do here?
So we think today makes a little bit more sense than yesterday. We were scratching our head yesterday that people were selling on an announcement that was relatively good. We think Apple will be a beneficiary of the new AI products they're going to have in a lot of their various devices. So, we like Apple here. We wouldn't chase it today. But again, if it were to pull back to the 190 level, we think it's a pretty attractive entry point. We think there is going to be an upgrade cycle and Apple is going to be a beneficiary. We don't think it's going to be on a tear. We don't think this is going to be a new environment where Apple is up 50% in the next year. But we do like the stock, from current levels.
Okay, so then that just leads me to other areas of the AI ecosystem that would presumably benefit from such an upgrade cycle. I don't know if we can draw a direct line to NVIDIA, but just broadly speaking, are you interested in that stock still? What about the rest of kind of the AI, picks and shovels?
So NVIDIA is a great company, but there's a tremendous amount of positive expectations in it. One of the companies that we just talked about is Cisco. Mm-hmm. They are a second or third derivative beneficiary of AI. To date, their stock has done absolutely nothing with that. At some point, all of this additional AI is going to create additional bandwidth. You're going to need Cisco to lay out those cables. Stock's going to be a beneficiary. It's at 12.5, 13 times earnings and pays you a good yield. Another one that has done quite well, so it's not nearly as cheap, but is a direct beneficiary of the new upgrade cycle in phones, is Qualcomm. We think that has a new business cycle in terms of phones. Also, they're going to be in PCs with AI. So that's an exciting company, not nearly as highly priced as NVIDIA, but also their prospects are good, not great.
David, always great to check in with you. Thanks so much for your time today. We appreciate it.